Good evening, all the joinees. Thank you for joining in. Hi, this is Ashi. Welcome to the webinar conducted by NGEN Research. Meanwhile, others join in. Let us have a look at today's topic. So today we'll be covering the topic of analyzing debt-oriented mutual funds, wherein we'll be covering the topic of asset allocation and credit rating, then various parameters for analyzing debt-oriented mutual funds, and finally creating a conservative debt portfolio. And lastly, the forum will be open for a Q&A session. So this is the landing page of NGEN Markets. For today's webinar, we'll be focusing on funds, compares, and portfolios tab. So first, I'll move towards the funds tab. Now, this is the screener that we have provided, wherein you can filter the funds based upon the AMC, or you can filter it based upon the categories as well. Now here you can see that there are four buckets which basically represents SEBI asset classes and within which are the multiple categories that are listed. Today we'll be focusing on debt as an asset class. Within debt as an asset class, I'll be selecting few categories. First would be liquid fund, then long duration fund, followed by medium duration fund, and lastly, we'll be looking upon corporate bond funds. Now, once I click on these checkbox, all of the funds will get loaded onto the screener. Now, as this gets loaded onto the screener, we can see that there are 50 results. Now, to increase the number of funds in the list, we'll click on the drop down that states show top. So I'll click on the drop down and select 100 and then hit on apply. Now we can clearly see that there are total 94 funds that have gotten listed onto this particular screener. Now we'll apply certain basic filter parameters to narrow this list down. So for that, I'll be applying minimum AUM as a parameter. So let's say I only want those funds that have minimum AUM of 2000 CR. So I will enter 2000 right here. And I would be also applying one more filter parameter basis the age. So let's say I only want those funds that have completed at least 5 years of age in the market. So I will apply 5 as a minimum age filter criteria and then I will hit on apply so that the system can take it into effect. Now we can clearly see that from 94 we have come down to 50 such funds. Now, as you can see that there are multiple columns. Also, there are certain blank column as well. Now, to get all of the relevant columns in preset column view, I'll click on this drop down and select debt column. So all of the columns that are relevant to debt as an asset class will show up. Now we'll be selecting one fund from each category basis NGEN fund score, which is out of 10, and nearer they are to 10, the better it is. I'll also input a column of category for easier selection. So for that, I'll click on settings wheel icon and select SEBI classification. Now, as soon as I do so, this column named as SEBI classification will get added right here. Now here we can clearly see on the screener, the funds are arranged basis highest to lowest on the basis of the NGEN fund score. Now I'll start selecting one fund from each of the category basis the best score that is being given. So from liquid fund, I'll be selecting SBI liquid fund, and for that, I'll be clicking on this add to compare as an icon so that these funds can get loaded in the compare section wherein we can have a detailed analysis. The next fund that I would be selecting would be from this corporate bond fund category, wherein I'll be selecting iPro corporate bond fund. For that, again, I'll be clicking on this add to compare as an icon. And again, this will get loaded in the compare section. Now from medium duration fund, the first best fund right here basis the score is iPro medium term bond fund. Because we already have a fund from iPro as an AMC, I will move towards the next best. And here I can see that next best is SBI Magnum Medium Duration Fund. But we have already added SBI Liquid Fund onto the compare section. That is the reason I'll now move towards the third best. And the third best here would be HDFC Medium Term Debt Fund. Now I'll also load this in the Compares tab by clicking on Add to Compare as an icon. And then we'll move towards the last category, that is long duration fund. And in long duration fund, I'll be selecting Nippon India Nivesh Lakshya Fund. And I'll click on this Add to Compare icon. And as I do so, all of the funds will get loaded in the Compare section. And again, you can see that there are multiple columns right here as well. Now to custom your own column here, you simply have to click on this abacus icon. We'll just deselect all of the columns by clicking on all column and I'll select the relevant one. So first I'll be selecting age, then AUM, TER, price, which is basically the NAV, followed by standard deviation. Then I'll be selecting holdings, net YTM, average maturity, duration, and few credit ratings. That is sovereign percentage, AAA, AA, and single A. As we have selected the desired columns onto the compare tab, now we'll also pick up a start date because specifically for standard deviation, it would be since inception of all of these funds. So for that, what we do is we'll click on the settings wheel icon and pick up a date of past 5 years. So I'll change this to 2020, 1st April, and then I'll hit on go. Now, as soon as I hit on go, you can see that there is a prompt stating that a custom start date is being selected. Now let us take a look at the credit rating, basically meaning the exposure that is towards sovereign, AAA, AA, or single A rated security. Now we'll sort this. So as I sort this in terms of sovereign percentage, we can clearly see that Nippon India Nivesh Lakshya Fund has highest exposure towards sovereign, which is the safest and towards the government. And the second safest here is AAA and then so on. So we can conclude that safer the credit rating, the better it is. Now the next thing that we would be looking upon would be this net YTM. Now net YTM is nothing but the difference between YTM, which is yield to maturity, and TER, that is total expense ratio. Now if I click on a single fund, for example Nippon India, you can see a single fund analysis gets loaded right there. And you can see that there is YTM mentioned. Now this YTM gets updated on a month-on-month basis. Now we'll move back to the compare section and take a look at the other parameter. The next parameter would be this average maturity. Now this depends upon the underlying security that a fund holds and what is the maturity of those security. Now again, when I sort this from highest to lowest, we can see that Nippon India has an average maturity of 21.97 years. Being a long duration fund, it has the highest average maturity. And if I sort this again by clicking on the word average maturity, we can see there is a liquid fund, that is SBI liquid fund, having the least maturity of 0.13 years. So higher the maturity, higher is the risk, and lower the maturity, lower would be the risk. As we can see, liquid fund, it has short investment to park, and that is the reason the maturity is less as well as the risk associated with these funds are also lower. Now, if I again load a single fund analysis, let's say for example, HDFC Medium Term Debt Fund, here you can see there is a second tab called Asset Allocation. Now here you can find all of the holdings information of a particular fund. Now we can see here that there is a GSEC in the holdings with the maturity mentioned as 2037. Now, when multiplied with its respective weight, that is 8.10%, you will get a fund level average maturity, which is also mentioned right in this center. So, average maturity of this particular fund is about 5.99 years. So, this was for average maturity. The next important parameter while you're analyzing a debt fund would be the duration. Now, duration talks about how sensitive is a debt fund's NAV or price with respect to the movement in the interest rate. Now, if I sort this again, highest to lowest, we can see that Nippon India has a duration of about 10.63 years. Whereas if I sort this lowest to highest, we can clearly see it is SBI Liquid Fund, which has a duration of 0.12 years. So higher the duration, higher is the sensitivity towards interest rate, whereas lower the duration, lower is the sensitivity again towards the interest rate. Now please note onto the platform we only show modified duration. You can also find that there is a direct relation between duration as well as the standard deviation. Now liquid fund having the least duration also has the least standard deviation of 0.23%. Whereas a long duration fund, as we can see, Nippon has a duration of 10.63 years, also has a higher standard deviation in comparison to the other debt funds, which is about 4.19%. So this is how you can understand the duration is somewhat related to standard deviation. And like I mentioned, there's also a correlation that happens between interest rate as well as some debt-based fund. Now, to understand this correlation between a fund's NAV and the interest rate, for that we load the interest rate in the compare section. So for that, we'll move towards the markets tab, which is the first tab onto the platform and also the landing page of the NGEN market. Within this market tab, there is this section called economic data, wherein you can find macroeconomic data of India as well as for the other countries as well. Now, the second item here you can find is the interest rate. Now, how to download the entire history of India as a country when it comes to interest rate? You simply have to click on this see history as an icon. And right here, you can see that there is an Excel option. You click on this Excel icon and the entire sheets get downloaded onto your system. So we have date as well as the interest rate against it. So what we'll do is we'll copy this two columns. So I'll copy this entire column and then I'll move towards my securities tab. Now this is the section which is used to analyze any kind of non-standard asset. It can be gold, silver, PMS or AIF. Right here you can see we have mentioned that there are two pieces of information that is required. First would be date series and second would be price series. Somewhat similar to what we have copied from the Excel. So interest rate information is something that you would be required to paste it onto this white box. So I'll just paste the two column right here and then you just have to click on validate as an option. Now, once all of these points get validated right here, you are then required to give it a name. So I will give this name as interest rate series. And then I'll select an asset class. So I'll just select debt and then save it. Now, once this gets saved, you would be able to locate it in the compare section. So we'll move towards the compare tab. And right here, that is add portfolios and securities, you can see select security. I will hit on the drop down and select the saved interest rate series. So I'll just click and it get loaded right here onto the main list. Now we'll move towards the correlation tab. Now, all of the funds that we see here, whether it is SBI Liquid Fund, IPRU Corporate Bond Fund, HDFC Medium Term Debt, or Nippon India Nivesh Lakshya Fund, they all have negative correlation with the interest rate. So it shows that there is an inverse relation between interest rate and NAV movement of the fund. So be it liquid fund, long duration fund, or a corporate bond fund. Now let us convert the selected funds into a portfolio and then have a further analysis. So for that, what I'll do is I'll move towards the main list and firstly, I will remove this interest rate series from the list. So I'll just click on this delete icon and as this gets removed, I will then click on this option which is convert to portfolio. Now, as soon as I do so, this will get saved by a default name called from compare to in a folder called compare. So I'll click on OK. I'll move towards the portfolios tab. And as soon as I move towards the portfolios tab, I'll just collapse all of the columns. And here you can find there is a folder called from compare. I'll click on this plus icon. And here you can see that there is this particular portfolio that we have saved with the default name from compare to. Now let us say you want to rename this particular portfolio, that can also be done. So I'll just click on this drop down, rename this particular portfolio as debt portfolio April. And I'll hit on enter. And then I'll just click on the drop down and run this portfolio. So as we have directly shifted this particular portfolio from compare section to the portfolio section, we can clearly see that this is an equally allocated portfolio. Now here you can find all of the information related to the exposure in the asset allocation tab. Within this asset allocation tab, the first tab that gets opened up is the overview. So here you can find all of the exposure. Also, there is a dedicated tab for debt analysis. So you just simply have to click on this debt option right here. Again, within this asset allocation tab is that the last tab that is debt. Now, the first thing that you would be able to see here is the credit rating of the overall portfolio. That is AAA, sovereign, and so on. So once you add all of this up, it will come up to what is being reflected in the overview section. That is 99.34%. Now, few information related to debt for the overall portfolio is what we can find is the average maturity, that is 8.20 years. Average duration is about 4.29 years, as well as average YTM of 7.43% is also mentioned. Now, portfolio level YTM comes by multiplying the average YTM of a fund with its allocation in the portfolio. So once you add this all up, you will get a portfolio level YTM. Now let us also look at a scenario analysis. So in this particular portfolio analysis, there's a second last tab called scenarios. So as soon as you move towards the scenarios tab, now this particular tab is used to understand how the portfolio was performing versus to that of the benchmark in any of the past event. So there are certain inbuilt scenario onto the platform. Also, you can custom your own scenarios as well. So there are multiple scenarios that we can create. So the current scenario that is going on is of tariff. So let us try to understand how our portfolio was performing versus to that of the benchmark while this particular tariff scenario is still ongoing. So I'll click on add custom scenario and I'll give it a name as Trump's tariff and select a start date of 1st Jan and end date, which is the recent. And once I have input all of these information, and then I'll click on save custom scenario. Once you do so, within this custom scenario tab, you can find the scenario that you have right now created manually. So we'll just click on it and we can see that our debt portfolio, which is represented in this black line versus the benchmark was, sorry, our benchmark that is basically highlighted in the black versus our portfolio that is highlighted in the blue was clearly not able to outperform. During this particular scenario, we can see portfolio generated a return of 2.89%, whereas benchmark to an extent of 3.86%. Whereas the volatility of our benchmark was higher, which was to an extent of 2.01% versus to that of the portfolio, which was about 1.16%. Now, if you want to compare this particular portfolio with a broad-based indexes, let's say Nifty 50, because currently the index that is being selected is reference index 11. Now, basis the asset allocation, the platform will automatically pick up a reference index. That is something that you can find right here. Now, if you want to check what exactly is this reference index and what is the component of this reference index, and let's say you want to change the benchmark, that can be done by using this benchmark section on the top right-hand side. Within this engine sub-tab, you can see what is the reference index that is being selected as well as what is the component of it. Now here we can clearly see that it is reference index 11, which is made up of 100% CISL bond index. Now let's say you want to compare this debt-based portfolio with that of Nifty 50. I will just move towards this NSE tab and select Nifty 50 right here. And then I'll select the scenario again. And here we can clearly see that our debt-based portfolio was generating a positive return of 2.89% versus to that of the benchmark, which was in negative, which is Nifty 50, about negative 5.66%. The volatility that our benchmark was facing was higher, which was to an extent of 14.37% versus to that of the portfolio, whose volatility was about 1.16%. So there are multiple scenarios that you can create and check how the portfolio has performed versus to that of the benchmark. So that is it for the today's webinar. The forum is now open for a Q&A session.
Any questions, please let us know. All right, Ashi, if there are no questions, we can end for today.
Oh, thank you for joining in. You can anytime view
Hello.
the past recording.
Yes.
Hello.
Yes, yes, please go ahead.
Yeah, hi, this is Nimisha here. I just wanted to check. I'm looking at the screen right now, wherein we can see ICICI Corporate Bond Fund, HDFC Medium Term Debt Fund, SBI Liquid Fund, and Nippon India Nivesh Lakshya. So these are four funds that we have selected in the portfolio, and three of them are in red, and Nivesh Lakshya is in red. Sorry, three of them are in green and the other one is in red. So how do we identify that which is to be selected for the portfolio?
Yes. So these are typically the scores, fund score that you can see is assigned to each of the fund. Now, I'll just also explain or rather give you a quick reasoning of how do we arrive at these scores. We take into consideration the AUM of the fund. 10% weightage is given to the AUM of the fund, and the remaining 90% gets distributed between the short, medium, and long term returns and volatility. So 10% goes to AUM, and the remaining 90% goes to the short, medium, and long term returns and volatility. And also, age happens to be a qualitative parameter right here, wherein let's say the scheme happens to be a younger fund, that will end up getting a lower score when you consider it to that of an older fund that way. Right. So this is
So
an
Ashu, I just saw that you have selected few of the filters and then you
right.
got the score.
No, this score is that way mentioned on the platform for every fund, which changes on a month on month basis.
Okay.
Yeah. So every fund on the platform will be having it, which changes on a monthly basis.
So do we have to follow the score which is now there on the screen, red and green, and by that we have to select the fund? I mean, red is not good and green is good. That is how you identify?
Um, yes, meaning that could be one of the way. We are not saying that that has to be the only way. That could be one of the way you can go forward with selecting a fund, right? You might also have your respective parameters for selecting funds. This can also be a addition to that parameter that you follow. The color,
Okay.
the typically the color that you're seeing, it is typically grading the funds, whether it is giving a best score or the worst score. So the darker green says that these are closer to
So
10.
that score, so exactly that is what the point is.
Huh,
Now, as we can see that SBI Liquid Fund has a score of 9.83 and it is dark green. So do we
right.
have to consider that this is the best performing fund so far?
Yes, you can also verify that, right? You can simply load this category of liquid fund. Currently, I feel that happens to be the best fund. We can also check that, right? So I've just loaded this SBI liquid fund. It opens in a new page. You click on the black tile. So right here you see, as of the latest month, the latest data in this category, SBI liquid fund is performing the best and has gotten a score of 9.83.
Okay,
Yeah,
I got it.
yeah,
And now, when we have selected a few of the funds, like you selected long duration, short duration,
right.
in that long duration, we could get Nippon India Nivesh Lakshya,
Yes, that could be because
right?
maybe, yes, yes. That is
So
correct.
this is basically a comprehensive portfolio that we have created according to long and short durations.
Right, because we were majorly focusing on debt as an asset class and wanted to just create a
Correct.
portfolio of debt at the moment. Yes.
Correct. Thank you so much.
Yes, no problem. Any more questions? Please let us know. All right, Ashi, then we can close for today.
Okay. Thank you everyone for joining in. You can anytime view the past recording on our YouTube channel. There's a dedicated webinar playlist that is being created right here. So as of now, there are total 154 videos. This week's webinar will be released by next week. So thank you so much and happy weekends.